Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Hello JEC, and thanks for the confirmation about the audio. Before I get started, let me go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in YouTube, in Discord, in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on-topic questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord and the chat and YouTube for your questions. So again, please post questions and comments. They are welcome. All right, let's get started. So the agenda for today, what I want to talk about is economic data and events for today as well as the rest of the week. And then we'll go through our positional analysis, and then we'll talk about setups. All right, so first of all, the news economic for today, the big news was the CPI data that came out at 8:30 a.m. Eastern Time, and you can see that all of the numbers came in as forecast or in line with forecast, except for one. Let's see, where was that? This U.S. core CPI month over month, a little bit hotter than forecast and previous. Otherwise, all the data was in line with forecast and lower with the previous numbers, lower than the previous numbers. All right, so the market initially had a bullish reaction to that data. All right, so that was today. Tomorrow the PPI comes out at 8:30 a.m. Eastern Time. Thursday jobless claims, and there's a few other pieces of data. And then finally, Friday is the big options expiration, the monthly options expiration, and that is also the quarterly expiration. And usually those quarterly expirations are large expirations. All right, one thing that I want to take a look at, let me just refresh this page. We looked at this yesterday. This is the Fed Watch tool, and this changes constantly throughout the day. And what this is showing is the current Fed funds rate, and the current target rate is 450 to 475 basis points. And this is showing right here, right now, a 30% chance of zero increase at the meeting next week. So again, a 30% chance of maintaining that current level, and then a 70% chance of a 25 basis point increase. and then there's a 0% chance of a 50 basis point hike, and that a couple of weeks ago that was not zero, and actually here 1 week ago that was at close to 70% of a 50 basis point hike. Let me just clean that up. So a week ago, 70% chance of a 50 basis point hike, 30% chance of a 25 basis point hike, and 0% chance of no hike at all. So big shift in outlook for the Fed funds rate. All right, let's take a look at our charts now. We'll take a look at levels, so we'll start our positional analysis. And let's start with the S&P 500. This is the ES futures, and notice I have the June contract up, the M contract. And before I dig into this chart, I want to take a look at a larger time frame, and we're just going to look at the SPX. So this is a 20-day 1-hour chart in Thinkorswim, just showing price for SPX and the key gamma levels from Spotgamma. And these levels are provided to Spotgamma subscribers in a ThinkScript. And this is something that you do have to update manually, but it's provided for you. It takes a couple minutes. And this is showing, again, just SPX price and key levels. And let's take a look at the levels that have been in play for the last few days. So here's the put wall at 3,800. And note yesterday that there was SPX did not quite make it down to the put wall at 3,800, but reversed higher just above that level. And then here is the 3,850 level, the 3,900 level that has been in play for today. And then here's the volatility trigger and a resistance level up at 3,950, and then there's the 4,000 key gamma strike. So those are the levels in play. Again, that's a 20-day 1-hour chart. And now let's take a look at another Thinkorswim chart. This is just looking at today. This is a 1-day, 1-minute chart, again for SPX, just showing the levels that are in play. And here's the 3,900 level. And that was noted as resistance, but there was a note in the AM Founders note that we'll take a look at in just a minute. And then here's the 3,950 level above and the 3,960 volatility trigger. And in just a minute, I will look at, I'll go into what these levels are in more detail. Okay, just want to point out one note that was in the Spotgamma AM Founders note about the 3,900 level. And that's this note right here. And this is just a snippet from the this is just a snippet from the Spotgamma AM Founders note that is full of very useful information, and noting that the 3,900 level must be recaptured for the bulls to have some measure of relative safety, and looking for 3,950, a test of 3,950 if 3,900 is breached. So that appeared to be what was happening this morning until JEC notes news about a Russia crashing into a U.S. drone Okay, thank you, JEC. So, definitely a news-driven market as usual. All right, so let's take a look at, so that was that note, and this is what happened this morning is a break above that 3,900 level. All right, let's take a look at Bookmap now. And again, this is the ES futures, S&P 500 futures. And this is showing the levels, the same levels. Let me just scroll up a little bit here. Same levels that are in play, just shown here in Spotgamma cloud notes. And these are also provided to Spotgamma subscribers. And I have them in this column here. These are cloud notes that are updated automatically. They're showing key gamma levels for SPX and also combo levels for SPX and SPY. So there's the 3950 level that was noted as resistance in the AM Founders note. And then there's 3,900, which was also noted as resistance. But again, we saw the note about 3,900. And then there's a combo level that combines SPX and SPY levels into one level that is converted to an equivalent SPX number and then converted to an equivalent ES number. And right now, Spotgamma is using a 40-point difference between ES and SPX, and I calculated about a 36-point difference as JEC did as well. So I'm showing my levels just a little bit lower, and we can zoom in and see that. So right here is my 3,900 level, and then there's Spotgamma's 3,900 level, just 4 points above. And I'm also showing key SPY levels. So that 390 is the SPY key gamma strike. All right, so those are the levels in play. In the S&P 500, and this was a great long setup this morning. And when we look at the data, we'll in just a moment we'll see why. So this was definitely supported by order flow and market maker hedging flow shown by Spotgamma Hero, as well as the large amount of gamma notional leading to a put Vanna rally. So we'll look at the S&P 500 setup in just a couple of minutes. All right, let's take a look at the data. So we'll finish up our positional analysis, and then we'll look at the S&P 500 setup in more detail. So let's start with the S&P 500 charts, the gamma level charts. And this will show where that data, those levels that I was just talking about, show where those levels come from. So this is SPX. These are gamma levels, absolute gamma levels. And this is market maker's position at these strikes. This is the zero level. And above that level, that's positive gamma or call gamma, shown by the black bars. And below the zero level, that is negative gamma or put gamma, shown by the teal bars. And this is showing, again, this is SPX, showing that 4,000 key gamma strike. That's the absolute gamma strike, or the key gamma strike, and the strike with the largest absolute gamma. And that can act as support, resistance, or a magnet for price. And then 3800 is the put wall. That's the strike with the largest net negative gamma, and that can be expected to act as support, as it did a couple of days ago. And then the call wall is still at 4200, which is out of range of this chart and definitely not in play. So there's the 3800 put wall and the 4000 key gamma strike. And then note the dominance of put gamma below 4000, but there is some call gamma, positive gamma at that level below 4000 from 3850 up to 4000. But the dominant is put gamma. Put gamma is dominant. So that's SPX. Let's take a look at SPY. And these are the absolute gamma levels for SPY. And for SPY, 390 here is the key gamma strike, or the absolute gamma strike. 380 is the put wall, again the strike with the largest net negative gamma, and that can be expected to act as support. And then the call wall remains at a rather strange 430, well out of range. And the call wall is the strike with the largest net positive gamma, and that can be expected to act as resistance. And note, just like SPX, the dominance of put gamma below the 400 level, and especially at the 380 to 390 level. Right, that's SPY, the absolute gamma level. So again, that's showing where the call wall, the key call wall, put wall, and key gamma strike come from for each of these and what they mean. And then here's the combo levels, and this is combining SPX and SPY gamma levels into one number, an equivalent SPX number. And then shown on this chart, again, positive above the zero line and negative below. And this is showing here, this is a good way to spot the gamma flip level, which is the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, and it's obvious here, market maker's position on the gamma curve is negative. That means that traders are long puts, market makers are short puts, and market makers have to hedge their delta exposure in the direction of price in a negative gamma environment. And so as price decreases, they will have to sell futures to hedge their delta exposure. And if price increases and implied volatility drops, they can buy back their short futures. So this is showing that gamma flip level at around 39.60. So there's the volatility trigger for SPX. And pretty obvious, all the put gamma below and a very little call gamma above. And there's SPY. So this is the combo strikes, SPX and SPY, converted into an equivalent SPY number. And then there's that gamma flip level right around 395, the volatility trigger. All right, so there's a question in YouTube. I'm just a beginner. What does the gamma levels mean regarding trading? What is a call wall? What is a put wall? So I cover that briefly. The put wall is the strike with the largest net negative gamma that can be expected to act as support, and the call wall is the strike with the largest net positive gamma, and that can be expected to act as resistance. And for further information, I would urge you to go to spotgamma.com, go to this free resources, and you can go to any one of these for more information. Go to the pre-training definitions and terms and FAQ and support center. So just go to spotgamma.com for more information. All right, so we're back on the gamma levels now. So that is, again, we're just showing where those levels come from. Here's the NASDAQ, and for the NASDAQ, we just look at QQQ. So for QQQ, the put wall has dropped down now to 280. Again, the strike with the largest net negative gamma. And the key gamma strike remains at 290. And the call wall is up at 310. And just like the S&P 500, there's a dominance of put gamma below this key 300 level. All right, let's take a look at the data now. And as usual, I like to look at the gamma notional. This is market maker's position on the gamma curve for SPX in the left column, SPY in the middle column, and QQQ in the far right column. And notice all these numbers are negative, and they're still quite negative. These are pretty extreme readings based on my experience and what I've seen. So this indicates, again, in a negative gamma environment, traders are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure as price decreases. And if price increases and or implied volatility drops, and they usually go hand in hand, then market makers can buy back their short hedges. In the case of this very large gamma notional that we see here, this can fuel a negative gamma Vanna feedback loop on the downside. As price drops, market makers delta notional increases, and they have to continue to sell futures, and that can to hedge their delta exposure, and that can create a feedback loop. And then on the other hand, if price rises and implied volatility drops, those puts that traders, and we'll look at the VIX chart in just a minute, those traders paid high prices for puts, and they can lose value quickly, and most likely they're buying puts that either expire today or at the end of the week. And due to the effects of Vanna and Charm, the change in delta with a change in implied volatility for Vanna, and the change in delta with it as time passes, that's Charm. Due to those effects, those puts will quickly lose value. Traders may be taking profits, or there's puts are losing value. Market makers' delta notional will decrease, and they can buy back their short futures. And that was what I was looking for this morning, and I think probably quite a few people in Discord were looking for that as well. Okay, so that is gamma notional. So it's I think it's always important to know how market makers are positioned on the gamma curve at the beginning of the day. Let's take a look at the Vanna charts now, which illustrate this graphically. So this is SPX, and this is showing how market makers' delta notional, delta exposure will change with changes in price. So delta notional is shown on the vertical axis, strike price shown on the horizontal axis, and this green curve is showing how market makers' delta notional changes with changes in price and implied volatility. And again, that's the Vanna effect, the change in delta with the change in implied volatility. And what this is showing is that market makers' delta notional will increase as price decreases, and again, they have to sell futures. to hedge their delta exposure. And then the black line is showing how that delta notional changes as time passes. And that's the charm effect, the change in delta as time passes, a change in time. So that's SPX. And let's take a look at SPY. And a steeper curve, remember gamma notional was about 3 times as negative as SPX for SPY. And then there's QQQ. And then I forgot to mention, let's go back and look at the data again. And I forgot to mention the changes in these levels. So yesterday, and these levels today became slightly less negative than yesterday. So gamma notional for SPX yesterday was minus 1083, and today it is minus 873. So still very negative, but slightly less negative. And for SPY, gamma notional yesterday was minus 3000, and now today it is minus 2824. So again, slightly less negative. And for QQQ yesterday, gamma notional was minus 916, and today it is minus 695. And finally, let's take a look at this is my key gamma strike list, and I track this every day. This is just a very simple list of the stocks on my watch list and the key gamma strike, and I compare the key gamma strike for today that's shown on the D column with the previous key gamma strike that's shown in the E column. So that's from yesterday, and then I compare the number from yesterday today, and then I color code it. Green if the number increased, and this is generally a bullish signal. If that key gamma strike increases, I take that as a bullish signal, and I will generally go into the Spotgamma Equity Hub and do further investigation to see how the other levels changed. The call wall, put wall, and hedge wall. I'll see how those levels changed. So this is bullish for AMD and Snowflake, and then also bullish for VIX, which is not necessarily a good thing for the bulls. There was a build in interest in building call positions at higher levels in VIX. Okay, so given all that, this is all of my preparation, my positional analysis, and my thesis for the day was bullish. After the data came out, in line with expectations, a little bit less than the previous numbers, seeing the bullish reaction of the market before the open, definitely bullish, and looking for that put Vanna rally. So again, remember that traders the last few days, and let's just look at VIX. And traders were paying extremely high prices for puts. And this is at the open yesterday. And VIX continued to fall throughout the day and was falling until about 11:30 or so today. But traders were buying puts way up. This is indicating implied volatility. So implied volatility, I use it as a proxy for implied volatility. There's actually an equation behind VIX, but I use this as a proxy for implied volatility. And the higher the implied volatility, that indicates the higher demand for puts in this case. And when there's a higher demand, what happens? Price increases. And then this is indicating basically those puts that traders bought way up here have been losing value. All right, so that's VIX. All right, let me check for questions. So Roomba asks, falling prices increases the delta of being short puts, making the market makers decrease their delta by shorting puts. That's almost correct. They decrease their delta by selling futures. So traders are buying puts, they're selling puts, and as price decreases, their delta notional increases. Selling puts is a positive delta position, and they hedge their position by selling futures. All right, I'm looking at JEC's lengthy question comment in Discord. JEC, I'll have to, that's a rather lengthy comment question. I'll have to read that in more detail later, or read that slowly and take a look at it. All right, so let's go back and let's take a look at setups now. All right, so this is Spotgamma Hero, and this is showing the hedging impact of real-time options. So this is, again, that's what Hero stands for, and this is for the S&P 500, showing a combined signal of SPX and SPY options trades, and then market makers hedging activity. So that is SPX and SPY, and this is what I look at whether I'm trading ES, whether I'm trading futures, SPX options, or SPY shares or options. Any form of the S&P 500, this is the signal that I look at. And Spotgamma does provide separate signals for SPX and SPY, and I like to look at the combined signal here. So let's zoom in and take a closer look and notice that this signal has been is continuing to rise, and this is at the open when most traders start. I think the SPX options do trade before 9:30, but generally the volume comes in at 9:30, so showing the sharp increase, positive delta positions. A rising hero line means that traders are taking positive delta positions, and that continues to rise. And that was definitely a good signal for a long this morning, along with the bullish order flow and Bookmap that we'll look at in just a minute. Let's zoom in on this a little bit. So this is starting here at 9:30 a.m. and let's take a closer look and see what traders were doing. So the first thing that we can do is separate out puts and calls. And this shows, this rising orange line shows that traders are buying calls. And the way this works is when traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. And note the number here, this notional value for calls at 1.5 billion versus about 500 million for puts. So again, traders were buying calls and puts, but the calls were dominating about 3-to-1 over puts, and that was helping to drive price higher. And another thing that we can take a look at is this. So remember these numbers, 1.5 and 544. Let's take a look now at and this is all expirations that we're looking at right now. And let's take a look at the next expiration total. And I'm going to have to zoom back. And I don't know if I have quite the same. All trades and oops. And I'm going to have to zoom again. Sorry about that. Puts and calls. Okay. Sorry. So anyway, what this is showing is this call number here is about half of what we just saw with the all trades, all expiration signals, whereas this put number is actually larger. So what this indicates to me up until at least this time is that traders may have been building longer term call positions, at least longer than 0 DT, longer than what's going to expire at the end of the day. So it looks like they may be buying puts that expire today, but may be buying longer term calls that they will hold for more than one day. So that could be a potentially a bullish signal. So let's clean this up. Actually, I'm going to zoom out. So they continue to buy calls, and they've stopped buying puts, but price is going down. And this is the 0 DTE signal. And let's just go back and look at a simple signal now here, just all trades. And I'm going to focus on the morning. And so there's the morning session, definitely a bullish signal from Hero. And now let's go take a look at Bookmap. And I'm going to zoom in on the morning from after the data until about noon. So notice again, we know that traders were buying calls, and that's bullish. And then starting at the RTH open here at 9:30, the trend continues. Nice steady uptrend. Note the steady rising orange line, and that is showing buy stop orders, helping to fuel the move higher. And also the slight increase in iceberg orders shown by the light blue line, showing that larger traders are buying. And then overall cumulative volume delta shown by the dark blue line is also rising. So nice steady uptrend in the S&P 500, driven by call buyers as well as the put Vanna rally that I just talked about. So great long setup in the morning, multiple entry points, pullbacks to the, first of all, if you're trading before the RTH open, jump up, retest a VWAP, pause here at the 390, SPY 390 key gamma strike, and also the SPX 3900 level, and then price moves higher until about 11:30. All right, so yesterday I thought the best setups were in some of the big cap tech stocks. And I think it was just kind of the opposite today. The easiest, best, most easy to read setup was in the S&P 500 today. And JEC asked, do you feel it was a put Vanna rally more than the impact from the large call positions? Or I think it's both. I mean, there's hard, you can't really know which was the key driver, but I think they both certainly contributed. And then there's a question, is the put wall still at 3,900? And no, I assume you're talking about the SPX put wall, and that is at 3,800, and that shifted down to 3,800 on Monday. From Friday it was at 3,900, and it shifted down to 3,800 yesterday, and it remains at 3,800 now. So 3,800 is the put wall. All right, so nice steady uptrend. And one thing to keep a look at is this, or keep an eye on, is VIX. So let's just zoom in on today. So you can say up until about 11:30, 12 o'clock that put Vanna rally was definitely contributing to the increase, and now that fuel may have leveled off a bit with the increase in VIX. All right, so that's the S&P 500. Let's go back and take a look at Hero. And traders continue to buy calls. The puts line has leveled off. And that's pretty interesting. So based on this, I would say that to answer your question, JEC, we see the call line continuing to rise, and just as before, that's kind of a steady uptrend. Price decreases about the same time that VIX ticks up. So I would say, based on this, that rally this morning you may attribute that more to the put Vanna rally rather than these calls. Or rather than the call buyers. All right, so actually let me change that back to the total signal. So Hero continues to rise, prices continues to fall. Okay, that's the S&P 500, great long setup in the morning. And now let's take a look at some stocks. Here's Apple. And I thought this set up a nice short. This gradually decreasing Hero starts to fall about 12:30, or fall quicker about 12:30. So let's go take a look at Apple. In Bookmap. And RJ asked, does zero DTE intraday usually dominate order flow for SPX? And often it does. It's always a key component. But if you have access to Hero, you can see for yourself. you can just compare the, when we get back to Hero, I'll show you. You can compare the notional value for all expirations versus the 0 DTE to see what sort of effect it had. So again, we were looking at Apple now, and here's the short setup. And note here, I'm doing an experiment with these volume dots. I just want to see if this adds any clarity. And I'm showing now total volume. And typically I've been looking at this volume delta buy minus sell, the delta, again, buy minus sell, which just shows the separate pink and green dots. And again, this is just an experiment to see if I see any clarity, any more clarity with these total volume, showing this kind of pie-shaped chart with the total amount of buys and sells in a single dot. So I'm going to try that for a few days. So there's Apple, and you had to wait for this. Actually, let me try that again. So we know that Hero is sloping down. Just look for the reversal. There's the trend break, a retest of this 153 level, and then price is making lower highs, and there's your short setup in Apple. All right, so that's Apple. And let's take a look at AMD. And AMD was very strong in the morning. Let's take a look at Hero. So there was a strong, just in the first half hour, strong confirmation for a move higher. For the first 30-45 minutes. Looks like about 30 minutes there. And now Hero is trending lower, but price is holding pretty steady. All right, let's take a look at Meta now. And this was a much cleaner signal for a long. Let's see what traders are doing. So up until about 2 o'clock, they were buying calls, and they stopped selling puts around a little bit before 1 o'clock, and then they started buying puts. All right, let's go take a look and notice the strong correlation. Hero rises, price rises, Hero falls, price falls, and then Hero ticks up again and price increases until Hero levels off and starts to fall. So very strong confirmation correlation between options trades, hedging flow, and price action. And let's go take a look at Meta. So very, very bullish price action in Meta here. And notice here that this delta setting for the volume dots is very easy to read for Meta today. I mean, you can see the clear shift, for example, right here between the pink dots showing, again, this is buy minus sell, so this is indicating that sellers, aggressive sellers with their market sell orders, are dominating price. And then when there's a shift to the green dots, that's showing that market buy orders are dominating. And there's a clear shift, that trend break, market buys, aggressive buyers come in with their market buy orders and start to move price higher. And remember that Hero was rising. The options traders were taking positive delta positions as well. So I think this is one of the best, if not the best, equity setups that I saw today. And let's take a look at Microsoft. All right, let's go take a look at Hero. It's Meta. Take a look at Microsoft. And sometimes these large block trades come in and kind of obscure the signal. And that's what this vertical line means, is a large block trade. An institutional trader will come in. Let's see what they were doing. So they were selling puts and selling a large number of puts that causes that line to jump straight up. So let's take a look at before and after so we can get a cleaner signal. So this is up until about 11 o'clock. Very steady rise in Hero here. And this is providing good pullback settings with Hero steadily rising, good pullback entries as price drops and then continues higher. And let's take a look at after that large block trade. Sorry, I'm just trying to zoom to so this is a good indication of the influence of options trades, showing that Hero starts to drop, and then price follows. And notice now these more large block trades coming in. So let's go take a look at Bookmap again. So that may be a bullish signal for Microsoft. I meant to draw a line there. Just look for that trend break, move higher, and liquidity targets at 260 and 261. All right, let's take a look at NVIDIA. And another good bullish setup today. Let's go take a look at Hero for NVIDIA. Very strong correlation between options trades, hedging flow, and price action in NVIDIA. And notice how as Options trades level off and then start to drop. Price follows. Let's see what traders were doing. Look at puts and calls separately. So definitely calls driving today. Traders were buying calls, and then around 1 o'clock or so they stopped buying calls, and then they continued to buy puts, and price started to move lower. Let's go take a look at Bookmap. Oops, change that. Take a look at Bookmap. And notice that NVIDIA traded up to the upper edge of the expected move for the week. This is from the options market, and this is for the week, and I update this number on my charts every weekend. So definitely bullish price action here in order flow and hedging flow in NVIDIA, especially this morning. All right, let's take a quick look at SPY, see what the S&P 500 is doing, then we'll wrap it up with Tesla. All right, so it looks like the S&P 500 has almost made a round trip from the move up after the CPI data, then a move down to 388, and now maybe moving higher again. Let's take a look at Hero for the S&P 500. And it continues to move higher. All right, we'll wrap it up with Tesla. Pretty choppy day in Tesla. There were definitely better setups that we saw with Microsoft and NVIDIA and Meta, for example. Let's just zoom in on this. Then we'll go to Bookmap. Take a look at Tesla. Yeah, pretty choppy day in Tesla. So I thought the best trades were the S&P 500, of course. That's usually where I start, and that there was certainly a strong thesis with the put Vanna rally, and then the data that came out that was not as bad as expected or better than expected, and then of course Meta and NVIDIA. All right, so there's a request to look at 0 DTE for SPX, so we'll take a look at that, and then we'll call it a day. Back to SPX. Note this number here, 2.747 billion. And let's just go turn that off. Next expiration. So again, like I noted before, it looks like the longer term is dominating today. This is only 400 million. And we can actually compare the two. So 2.5 billion versus 463 million. So in this case, there's your 0 DTE, and it is not dominating hedging flow for today. All right. I think that is it. That's all I have. I think I've answered all your questions. So thank you for watching. Thanks for your questions and comments. And I will see you tomorrow. Thanks again. Bye.